WeWork shares are slumping as the company says that it will not make two interest payments totaling about $95 million. You're looking at extended hours loss of just about 10%. Now, it is entering a 30-day grace period for the payments before a possible default. Earlier this year, WeWork conducted a 1-for-40 reverse stock split to retain its listing on the New York Stock Exchange. At its height, this company had a $47 billion valuation. And Brad, the company has been in distress now for some time. Now, this move here, it's meant to jumpstart some of the negotiations here, just about potentially getting a more favorable deal from lenders. It has, though, of course, prompted some talk about bankruptcy, what we could see there, because remember, it was just, I guess, less than 2 months ago that WeWork first came out saying that they warned investors about, quote, substantial doubt exists about their ability to continue as a going concern. And we've seen the return to office figures. They're in a very, very tough industry at this point, trying to figure out their way forward, and they're just trying to buy, I think, as much time as possible.
Two numbers that I zero in on that spell out some continued doom and perhaps even more gloom for WeWork here, even more so than they've already put out there. They did a 1-for-40 stock split earlier this year, not stock split, reverse stock split. So ultimately, that just trying to make sure that they didn't get delisted. Another big number, 6 months into this year, this company had already lost about $555 million here. Now, that is an improvement year over year, but I think the trend continues to be locked in place in terms of the amount of losses that they are seeing. And on a quarterly basis, it was actually greater, their loss from operations in this most recent quarter that they reported for $351 million in losses from operations versus the $316 million that they saw in the comparable quarter last year. All these things considered, WeWork and the broader trend, the wave of people that are willing to work from anywhere, means that they're not thinking about needing to go into a physical workplace, or not as many companies are saying, all right, do we need to have a WeWork location that we open up for employees to kind of use as a hub in certain cities? Well, most of them already have either the technological tools that those companies have dispatched to them the second that they were prompted to work from home for an extended period of time. When you've already got that in place, nobody's just going into a place because they got free coffee all the time. They're trying to figure out, okay, if I can do this effectively from my home or perhaps from a beach in Morocco, then I'm just going to do that, and I will be a leisure traveler. I will have all the sunshine I'd like, and I will be able to make sure that I can still stay in connectivity and make all my meetings. And that's bad news for a WeWork here.
It certainly is bad news. Not bad. Working from a beach in Morocco.
I would love that.
Yeah, I was like, are you speaking from personal experience or just something you hope to maybe do?
It's on my Pinterest board.
It's like, there you go. But I mean, you're exactly right. This just gets to the broader issue right now, right? When it comes to commercial real estate, when it comes to office vacancy, what we're seeing play out right here in New York City, what we're seeing play out in a number of large cities across the country. There's a piece in the Journal today going through the latest stats about office occupancy or lack thereof, and Castle Systems saying that we're back to about half of what we were in 2019, and we've pretty much plateaued here over the last several months. Yes, there has been a move, certainly from a lot of the larger banks, some of the larger tech firms, to get their employees back into the office a couple days a week. But still, though, we're seeing the resistance there, and companies like WeWork obviously feeling the impact of that.